Hi, welcome to this video. It's the 19th of October. It's Saturday. We're just going to give our updated outlook and analysis for the GBP. Now, in terms of the GBP, we've had a key event happen in the UK today, which was obviously the vote in Parliament. I just want to go through how I think the markets might react in terms of GBP pairs next week. I'll look at GBP USD, also look at Euro GBP, and briefly at the GBP against the commodity currencies. Now, anyone who regularly watches our videos will know we're just extremely bullish of the British pound and have been for a while. It's our favourite long trade and it's got our biggest allocation. Now, in terms of the pound, it has moved up nicely for us. Really great move to the upside. And my view at this moment in time is the pound could pull back, but any pullback is not going to be that great and will be a buying opportunity on strength. And I think the pound long term just going way higher. Now, a lot of traders reluctant to trade the British pound that I know. They say, well, yeah, it's all to do with Brexit, so volatile. Okay, there is a low risk way of trading it, and this low risk way of trading the British pound, most traders don't think about, but it's a great way if you're worried about short term volatility, and it will apply this trade to almost everyone watching this video. Some traders won't be able to do it. I'll come to the trade or the low risk trade in a moment. Now, in terms of British pound, we will go and take a look at the charts right now. But please do keep in mind, it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can get live access to our member center on the link beneath this video. Right, trade we're going to look at first of all, trade setup is going to be GBP USD. All right, on the GBP USD monthly chart, just very quickly for new viewers, I know regular viewers have seen this chart before and probably know what I'm going to say, but just want to go through very quickly for new viewers how we've been playing this pair and also where our target is, which you can't see on the daily chart. Now, in terms of this 120 level, real key level, there's the vote out on Brexit. We tumble down. Speculators are anticipating a no deal. They go heavily short into the level, but commercials, the smart money, buys heavily against them, and we got from 120 to above 140. Okay, now in terms of here, when we came down to 120 again, got speculators going heavily short, almost identical position in size to the one over here. Commercials move almost identically they did on the previous dip. They go long. What happens? The pound bounces off the level, and we've moved up near enough 1,000 pips since. Now, in terms of where are we going, this 20-month moving average broke, and it's kind of like, you know, a bit of resistance here. You have pokes at the 20-month moving average. Now we're poking at it again. Pound goes through there. I don't see too much in the way of pullbacks. I'll come to the exact levels when we get to the daily chart, but above 130 we should be going north. And where are we going to go to? Well, I see no reason why we can't get back to those candles there. Okay, so basically retrace most of the Brexit big candle when the UK voted out. So plenty of upside, still 1,000 pips to the upside in our view. Now in terms of downside, we view it as limited, but I'll go through the levels sport on the daily chart. Now let's go and shift over to the daily chart and take a look at it, and also go through what happened in the UK Parliament today. GBP USD daily chart, and in terms of technicals, I'll do them in a moment. I'm going to be a little bit vaguer with my technicals in this video, just simply because of what has happened today. But you can follow our levels obviously twice daily in the member centre if you wish. Now it is going to be an interesting week ahead, because what happened today, MPs voted by 322 to 306 in favour of the Letwin amendment, which was passed by Parliament. We didn't get a vote on deal or no deal. The Letwin Amendment requires the PM to request a delay to Brexit until necessary UK legislation is passed. So he has to request a delay. That's under law. Okay. Now the PM says he will not negotiate a delay with the EU, and there's still a lot of talk about how he's going to do it. For us, if he decides to carry forward with the threat, it's pretty obvious how he's going to do it. The EU, under its constitution, can only deal with governments. It cannot deal with Parliament. So you can take the letter along, deliver it to them, say, this is what Parliament want, but you don't deal with parliaments under your constitution, you deal with governments. We're the government. We do not want to negotiate a delay. Now, Parliament will vote on the PM's deal next week. And if Johnson forces this point, you will see a retracement in the British pound, I think. He's going to play hardball, force the issue. Brexit concluded by the end of the month or out with either a deal or no deal. Now, in terms of the EU, I think they'll want to play hardball and help Johnson. And what I mean by that is they're fed up with these endless negotiations and Parliament not being able to decide. Jean-Claude Juncker has already said, we don't need another delay. President Macron of France has said similar. And I think they'll keep that stance up. To basically say to Parliament, you're not guaranteed to get an extension. I think if push came to shove, the EU would probably grant one, but they want to force the issue in Parliament. I think the EU and Johnson play hardball. You've got the stark choice, okay? Deal or no deal. And when that stark choice is presented to Parliament, Johnson, I believe, will get enough votes in favour of a deal, okay? But I think you could see retracement in the British pound. Now, before I draw my levels, I just want to go through this low risk trade, and it isn't doing a trade in the market. I'm sure regular viewers have guessed what it is already. Let me explain. Come down towards the 120 level. This trade still applies actually. Come down towards the 120 level. We know that speculators are heavily short. They're anticipating a hard Brexit. Said at the time, the odds of a hard Brexit were very low. Speculators very short, smart money very long. You could trade off the 120 level. Now, in terms of what we did, and this is in addition to our trades in the market, basically it won't apply to everyone, but it'll apply to a lot of traders watching this video. What's your account balance denominated in? Ours is denominated in USD most of the time, because USD we see is generally firm over the longer term. But when it comes down to 120 and a no deal effectively is being priced into the market, we'll just convert our account balance into GBP from USD. Okay. What's the risk on the downside? Not very much. In our view, it's an extra trade. You don't touch your leverage or whatever. So we just switched it over. Mentioned it to a couple of people at the time. We're a bit nervous about doing pound longs. Just switch your account balance over. And it's not done bad. Unleveraged trade. Up so far, 8.3%. Get up to target, 18%, just on switching the account balance. And when you're doing just a cash trade like this one, you're not worried about retracement. So we weren't. We got leverage trade in there, stopped ourselves out, obviously came back in again. We don't bother changing the account balance over the account balance stays. Okay, so it's a little bit of an extra trade, so to speak. And don't do it very often, but sometimes, switching your account balance gives you an extra trade. And the pound is so oversold. And I think longer term, the odds of a no deal are still low in our view. Pound going far higher. So just that account balance switch could make us 18%. We'll see, but we've got our leverage trades in the market as well. Now, in terms of, actually a little bit vague about the technicals, because it depends on Johnson forcing the issue. I think he will. The pound finished nice and firm Friday, saying in the member centre, best the banks and partial profits. We took 50%, they're 50% in. We'll be wanting to put back in our bank profit into the market. Now, I do think we're going to get some retracement. 128. If we crack that level, okay, next level down is 126. These are big levels in our view. So if we came down through 128, buy back through the round number, stop behind the next major support. You fell through 126. Next level down is here. 124. So you get back through 126, stop behind 124. It came down through 124, just key off the 20-day moving average. Now, in terms of if I wasn't in this trade, would I just come in and buy? I'd wait for the pullback, actually, if I wasn't in. And I think we will get a pullback. I'm not sure how deep it's going to be, but I just think there's going to be some retracement next week. It'll be an interesting week for sure. So yeah, just key off the big levels and play round numbers. Okay, and when you're playing a round number, go 30 pips above the round number to get rid of what I call round number turbulence, where all the orders collide. So yeah, I'm being a little bit vaguer than normal, but that's the way I see the British pound. Yeah, it's been a really good trade so far. I do feel we are going to be going way higher, but a retracement possibly coming. Right, now we're going to shift over and look at Euro GBP and some big levels. On Euro GBP daily chart, and in terms of this one, I think could see a little bit of a bounce in the euro. In terms of downside targets, we're not too far away from our first target, which is 85. Get my line straight. But we're looking for a move down to 80, which is monthly support. So a long way to the downside. We don't rule out a bounce. This has been one of our luckiest trades actually recently. In terms of we've managed to sell it through 90, down, stopped ourselves out there at 89.80, and then we wanted to see if it could go through the round number, and if it did go through the round number and failed, we just placed our order where our previous stop was and got back in. So got really good move to the downside, but I think euro could bounce a bit. And what you want to do is obviously look at the key levels. I think in terms of key levels, you got one level there. So if we bounce to that level, should be a sell. Stop behind that level, which is a weekly support level, monthly support level, also the 20-day moving average there. So we could gravitate up there, sell on weakness, or up to there, sell on weakness. And I would use a stop back behind the next round number. So if you come off 88, I'd be back behind 89. I know I'm being a bit vague, but that's what I think might happen. But we shall see. Now, in terms, I did say I was going to do the commodity currencies in this video. I actually have to go out, which I'd completely forgotten about. So I'm just not going to get time to do the commodity currencies. But you get the general idea of what we're doing. Looking for bounces and playing round numbers for fresh positions. So yeah, that's the way I see Euro GBP. Sorry, I haven't got time to do the commodity currencies. Cover them in a future video. Obviously update the British pound anyway, but that is the video for today. Thank you very much for watching me as per usual. Take care. Have a good day.